Yeah, okay, brilliant. Good morning, everyone. Certainly good morning in UK and Europe, but understand it's afternoon and evening in Singapore. So very warm welcome. So this panel is all about sustainability and ESG. So really glad to have Leanne moderating this session and a great lineup of speakers. So Leanne's going to introduce everyone, but just to say that this session is it's got Utopia in the title. Now, anyone that's heard about ESG, maybe that's not the first word that comes to mind, but I mean, it's such a huge topic, and really looking forward to the views of the panel here, touching on all sides, not only in terms of is it possible, and you know, what should people be doing towards ESG, but also looking at the RegTech lens. RegTech has a big part to play. But you know, there's so many facets to the challenge that is ESG. So without further ado, I'll hand over to Leanne. Hope you enjoy this session.
Thank you very much, Sarah, and welcome everyone. Good morning from a very sunny London. It's a pleasure to be here today to host this panel. And this panel is all about the utopia of a sustainable future in the regulatory space. ESG and sustainable finance, certainly one of my areas of focus. But before I tell you a little bit more about me, let me introduce you to my panel this morning. So I'm delighted to introduce you to Combe, to BT, and to Theo. Do you want to say a few words?
Yes, sure. I'll kick it off. Hi, everyone. Good morning from Zurich, and good evening to everybody in Asia. Thanks for sticking with us for this long, and hopefully this will be an engaging and somewhat uplifting session as well. So a couple things about me. I'm head global business management at SIX Financial Information. That is essentially the data business of the Swiss Stock Exchange. So I've essentially got a COO function there. I've spent previously 15 years in financial services and consulting, mostly at UBS in capital markets and risk, running large transformation programs like Brexit, implementing regulations and so on. I've got a massive passion for sustainability, which is the reason that I run the Enterprise Data Management Council ESG regulatory group, and I'm also heading up the Women Data Professionals European chapter of the EDM Council. And I've recently completed a master's degree in sustainability leadership at Cambridge, researching carbon disclosure comparability. So there's that financial services, sustainability, and data aspect to it. I'm very much looking forward to speaking with the panel today.
Thank you very much, BT. Cole?
Hi, my name is Colin. I'm calling from Kilkenny in Ireland. It feels a bit like the Eurovision. We're all over Europe. I work in Engage Hub. I'm the head of RegTech. Engage Hub of offices in Dublin and London, and we serve about 120 clients globally. Engage Hub is a journey orchestration company working across categories such as contact center optimization, marketing automation, journey mapping, and journey analytics. My actual background is in banking and financial services, working across products, channels, program management, and risk and tech transformation like GDPR, PSD2. I actually managed Engage Hub as a vendor for 5 years and deployed over 20 solutions in my previous company. And then I moved across to them at the back end of last year to focus on their RegTech propositions. So really interested in the sustainability agenda and really looking forward to the discussion today. So thank you.
That's great. Thank you. Theo?
Hi, everyone. So yes, I am Teodor Kojoianu. I'm an associate professor at the University of Edinburgh. And I also have the deep privilege to serve on the EU platform on sustainable finance as one of the full members, as well as the part of the Green Technical Advisory Group of the UK Treasury, which means I get a glimpse into, on the one hand, the the design or some of the design principles behind some of the sustainable finance legislation. And then in Edinburgh, we have a sustainable financial data science lab where, in a way, we're trying to understand how, from a data perspective, we can ensure the robustness of reporting, analyze impact contextually, not just globally, but also geographically contextual, certainly for some of the more bespoke environmental indicators like biodiversity. And so, yeah, I'm really excited to be with you today and to discuss with you, Leanne, Beate, and Colm on all of these aspects.
Thank you so much. Thank you. And just to finish off the introductions, let me tell you a little bit about myself. My name's Leanne Moore. I've been working within risk and regulatory compliance my whole sort of working career. I've worked with a lot of tier one investment and retail banks. So I've seen firsthand the opportunities and challenges that they've had implementing sort of the ESG agenda, but also the growing focus on sustainability over the past few years. About 18 months ago, I started to develop a real sort of interest in crypto, mainly driven from my focus on AML and financial crime. And I now work for a crypto consultancy called XReg Consulting. Now, there's been lots of discussions around whether or not crypto assets belong in an ESG-friendly portfolio, and we could debate this all morning, but that's not the subject of today. But certainly the technology behind crypto, blockchain, certainly does play a part when we start looking at sustainability. So it's an area that I'm hugely interested in and delighted to be here today hosting this panel. So let's start our session today with a little bit of background, a little bit of scene setting. So ESG and sustainable finance continues to dominate the regulatory agenda. And we've seen over the past few years new legislation really sort of coming to the forefront, such as the EU Sustainable Finance Disclosure Regulations, setting really strict minimum disclosure standards. But let's start our panel today with, some thoughts around this and thoughts around what do we actually mean by ESG and what's driving this focus. So let me open that up to our panelists. Beatty, would you like to go first?
Yes, sure. So look, are we going to reach utopia? Unlikely. I mean, what's the definition of sustainability? The Brundtland Commission came up with a definition back in '87, which I think still holds true. It's conveniently vague, but it basically says it's meeting the needs of the present without compromising the ability of future generations to meet their own needs. That's what sustainability is. We've already compromised that, right? So there's certain things we can't take back. On the other hand, we can improve the status quo. So it doesn't mean all is lost and it's all, any activity is not going to do anybody any good. So we need to work on it. We're sort of in that same situation as a 55-year-old overweight alcoholic that's trying to turn his life around, right? So the liver might be done with, but we can still do something to get to that health status and prolong that life. And it's the same with our planet. So we've got the sense of urgency, and that means we can take the action, and we should go for it, no matter what the outcome is going to be. We have to at least try. So that's my take on utopia and sustainability.
No, that's a great take. How about you, Theo? What are your thoughts around sort of ESG and sustainability? What's driving it?
Well, maybe just to continue the analogy from Beate, it's true that we're at a stage where our previous diet and lifestyle does dictate a lot of our life expectancy. That being said, we can still educate on kind of the basics of calories in, calories out, carbon in the atmosphere, carbon out of the atmosphere, and then how you cannot outrun a bad diet. So I think to some extent now with the advent of, for example, green taxonomies, taking, you know, back to what is really sustainable, right? We're now having legislations, pieces of legislation, which are looking at quite in depth at economic activities, trying to understand how they're sustainable for very specific environmental objectives. So pretty much, you know, if you want to build muscle versus, you know, you just want to lose weight, you know, we also know if you want to reduce carbon, what you need to do, if you want to improve biodiversity, what you need to do. And so in that respect, I think the clarifications for sustainability are, you know, emerging, and they are there, and they're just not necessarily just up to companies to simply disclose. So we're getting better in that respect, and then we're getting also better in some respect from a regulatory standpoint in making the connection between these environmental objectives, economic activities, with the different financial instruments and the financial flows that we, you know, are very much needed to get there. So I think, you know, yeah, there's a lot to unpack there, but perhaps this is one of the main drivers I'd love to talk to you about today.
Mm-hmm. Absolutely. Colin?
Yeah, like for me, ESG is kind of like a set of standards for companies and countries to adhere to for the objective to achieve that kind of sustainable, inclusive society. But I think in real terms, it's kind of the opportunity to leave the world in a better place for our kids and our grandkids. I think is Utopia achievable? I would have kind of concerns about some items, but to come back to that in a second, I think like what I think the driving focus at the moment is you've seen this kind of massive shift in social consciousness where the world's consumers and investors are now moving towards ESG type agendas, and you can see over 53 trillion in ESG funds by 2025, and largest fund managers have signed up to the principles of responsible investing. So I think we all know that once resource goes behind an agenda item, you start to see action, whereas before it could have been a lot of kind of dialogue. I think also you see kind of regulation. You know, governments and agencies know that they put rules and laws in place and also fines. They're going to start seeing that traction if we want to get to the pace we go to. So I think that's the difference between ESG maybe, you know, 5-10 years ago and ESG now. You know, it has that capital and that kind of social consciousness behind it. So yeah, so there's some ideas, but again, I just to talk later about where I see kind of some of the challenges of reaching that Utopia.
Yeah, definitely, and we've touched on this. That's great introductions. Thank you all very much. It certainly sets the scene for our session this morning, and we've touched on this point. But let's think about the sort of question for our panel today. So, you know, do we believe that sustainability is possible? Can we reach this utopia? I mean, we'll come back to this at the end of the session, but what are your sort of, is it achievable?
I might continue on there. I think like when you look at, there's kind of 17 UN sustainability goals to be delivered by 2050 across food, water, energy, health, poverty, work. And I think to deliver Utopia, you would say you have to hit all 17. And I think that's quite naive. And I think the biggest challenges are, you know, managing ESG through crisis. And we've seen, you know, with the war in Ukraine, we've seen, you know, through COVID, you know, it's very understandable that agenda item gets dropped down to number 2, number 3, or it's not considered at all. So I think that's a big challenge. I think global consumerism, I think is a big challenge, because if you look at, you know, 2 of the sustainability goals, one is to, you know, reduce poverty, but, you know, naturally when you reduce poverty, you increase consumerism. So I think there's a kind of a conflict there, an interdependency that needs to be challenged. So I think, you know, and Beata, you mentioned this, I think we can go on the right path, and we can reverse some of the harm that's been done over the last, you know, 100 years. But I think reaching that, you know, absolute target could be quite naive, but happy to reserve judgment until the end of the conversation.
I mean, BT, what are your thoughts on this? Can we reach utopia?
So look, I think if you're looking at what you would companies to do, what would you like companies to contribute, to get a bit more specific on this? I mean, I think, you know, as an organization, and us at Six as well, you wear various hats, right? So one hat will be your organization as a responsible organization. You commit to net zero. You make sure you've got you know, a sort of a culture of sustainability. You do the education and all that. You report. You're transparent. You make sure your workforce is okay and all of that. You've got diversity and inclusion as a topic, but then you've also got and I think that's the main piece where organizations need to find themselves, is this commit to comply. I mean, we can all report on net zero, but if you look at the raison d'etre, so the identity of the company and what the company can do in its position to make a positive impact, right? So for us as an exchange or as a data provider, we've got certain levers in the financial services industry that we can employ to create that positive impact. So we can create products that help other companies in the real economy provide transparency and are compliant, so that they're compliant with regulations, making it easier for them. We can allow funds to flow more easily through access to capital for SMEs through the stock exchange, right? So there's all these things you can do as a company to further that development. Now, in terms of data specifically, when we're looking at that, and we are in a RegTech panel, so it's all, I mean, data is very closely connected to the whole tech industry, right? So we've got metrics that allow comparability, and the question really is that enough, and are we there yet? We've got an abundance of transparency. We don't really have the comparability that we want that can provide that decision useful information to us, right? So what you need to do, you have to control the vocabulary around ESG, reporting to a certain degree, and you have to define the metrics that actually give you that transparency on impact, not the transparency on activity. That's not that important, but the transparency on the impact. And then you manage that data through the entire life cycle of the data, from the creator and the real economy to the user in financial services and investments, in government, in not-for-profit or elsewhere, right? So to close that loop, what you really need to do is you got to start collaborating digitally in a way that everybody speaks the same language. And there's, you know, the standard setters, the regulators, they're working on this, and there's lots of movement in the space, so much movement that you can hardly keep up. So it's definitely, that drive is there. But the most important piece, and I'm going to close my statement with that, is that it's all about the mindset. You need to understand why you're doing this reporting and why you're doing this transparency activity. And if you don't do it for the right reasons, if you only do it to comply with regulations, then you're probably not reporting the right thing, because you can change that data to look good, depending on what you want it to say, right? So impact, it's got to be the focus in all of these activities. So the spirit of the regulation is to save the planet, not to create reporting.
Thank you for that, and we'll continue to sort of build on our thoughts around what firms should be doing to help sort of improve sustainability goals. But before we do that, Theo, let me give you a chance to share your thoughts. So do you believe sustainability is possible? Are we ever going to reach this utopia?
Yeah, sure. So maybe also just to clarify the point on, we're talking a lot about ESG, right? And in the language of investors, that's usually the risk management, financial risk management angle, whereas the angle around impact management, it may be around linked to your ESG risk management, but it could also not be linked. So, for example, if we look at biodiversity issues for companies, you know, some of them may materialize as financial risks, but some may just simply remain as impacts. And for a very long time, for example, biodiversity issues have simply just been impacts which we've unaccounted for, and companies haven't been, you know, paying for example, for these damages. That's one point to say that perhaps the way we frame ESG has been narrow to just the business model of, for example, investment or financial services. Whereas now, as we're trying to link finance with the economy, we need to understand what does sustainability mean, or kind of getting back to a healthy state. Again, it's not necessarily utopia, but just even a feel-good state. And I think I'm happy to forward in the chat, in the EU platform, the question was, what is the equivalent of net zero to 2050 for biodiversity, for water, for circular economy, for pollution prevention? And the platform came up with these equivalent goals. Now, there's something to say if you look at the science. The way we're treating the atmosphere at the moment, we think that we can put up carbon or greenhouse gas emissions in the atmosphere, and then if we get it to net zero by 2050, we'll broadly be fine. So we're going to reach that state of climate sustainability. However, if you're trying to apply the same thinking and say, I'm going to damage biodiversity and I'm going to get my species extinct, and then I'm going to get them extinct a bit less, then the problem is you've already lost biodiversity, and this process is largely irreversible when you've done that. Of course, you can do some, restoration work and so on, but if you've lost an ecosystem, you've just lost it. If you lost the Amazon, you've just lost it. It's really so I think, yes, we can, and that's why I'm also in this job. And otherwise things are really grim. There is a lot of hope. There is so much to be done. Yes, we can do it now. Yes, we have all the technology, but some processes are reversible, some are not. And I think around impacts, around building these data points, I think we need to understand how they actually work at the science level, and then design these financial instruments which actually solve and protect in their actual contexts. Just to give you a bit of background, when we started designing the criteria for the EU taxonomy in the platform, it took us 6 months to get away from the inertia of the technical expert group and the thinking around climate change to then be able to apply it to biodiversity or water, because certainly a lot of the design assumptions that you work for climate, where 1 ton of carbon in Beijing or Singapore is equivalent to 1 ton of carbon in London, doesn't really apply to your water issues in Beijing or Singapore being equivalent to the water issues in London.
No, there's some great points that you've raised there. And, one of the key takeaways from listening to the discussions so far is that, yes, data and technology and AI helps, and we're going to explore those in a little bit more detail shortly. But equally, it's about the mindset and culture that's going to make the biggest difference. So thank you so much for sharing your thoughts on that. Colm, let me come back to you, because as a sort of RegTech vendor, what role do you see RegTech doing in sort of supporting organizations in really sort of delivering on these commitments?
Yeah, I think RegTech can play a pivotal role for organizations in ESG strategy delivery. Like ESG up to quite recently was an investor relations marketing brand play, and ultimately ended up in the CSR report. I think now ESG is embedded into the fabric of organization strategies across operations, product, channels, and HR. And I saw a recent study from Harvard Business School that said 90% of all organizations fail to execute their strategies. And I think that's pretty grim, and I think consequences for that failure are very real. Like I just read there last month, the SEC fined Boney Mellon Investment Advisors 1.5 million for missing information about ESG quality reviews, and 27 million in fines to over 30 companies in 2020, 2021 in UK across insurers, energy, brewers for climate change breaches. So fines are happening, but I think aside from fines, more organizations delivering their ESG strategies means a more sustainable, inclusive society for everybody. This idea of kind of the rising tide lifts all ships. So we need to succeed together. And I think RegTech can play a really strong role in closing that strategy delivery gap. Being a program manager in a bank, You have to look at what's causing the failure before you can look at how to address it. So I think organizations need to look very closely how to move between strategy design, ECG strategy design, and execution. And according to the Project Management Institute, there's kind of a number of steps that you can take to do that, to close that gap. You know, increasing leadership accountability as you move from strategy design to execution, assigning correct resources, human and financial, leveraging customer and competitor insights. But I think most importantly is that number 4, simplification and consistency. And I think strategy is not simple and it's not consistent. You're not going to be able to execute. So RegTech plays a role around, you know, we think about ESG data collection, automating manual tasks around horizon scanning, workflow management, moving away from Excel and Word, you know, partnering for point tech solutions for ESG obligations, how you do your reporting, so that's, you know, internal, external, board updates, CSR reports, ESG disclosures, making that data very accessible. At the moment, you know, a lot of organizations is really, really complex. And I think when you talk about consistency, you know, there's ESG for HR, for health and safety, for product, for investments. And if people don't have consistent ways of gathering data, consistent frameworks for moving that data across organizations, you're going to have more critical points of failure. So I think ESG can play a really important role there. And just to finish up, I think we did a proof of concept with a couple of proof of concept with organizations looking at the area of customer satisfaction, and data protection would fall under the S, you know, social and ESG, where smishing is a big issue currently, which is negatively impacting, you know, both customer satisfaction and data protection. So we looked at the obligations, we looked at the ambitions of the client, we deployed a solution called SMS Authenticator, set measured KPIs to monitor the success, and then, you know, provided that business reporting on how it was doing. So it's a small journey within a very complex ESG environment, but it just showed around, you know, how we can automate the data, provide a solution, measure those solutions, and provide reporting. So, sorry, that's to finish up. I think ESG or RegTech can play a massive role in ESG delivery.
Yeah, no, that's you know, you raised some real sort of tangible points that that firms can start to sort of look at, and I've certainly been reading a few articles recently that sort of suggest that you know, ESG mis-selling could be the next big scandal, and we're certainly seeing that coming through now. So it's great that there are these tangible actions that, you know, that firms can take to try to mitigate against that that risk. I mean, we've been sort of touching on the points around data over the discussions so far, and you know, there's a whole sort of wealth of data and content available on ESG, but there seems to be this sort of gap between information and reliable insights, and that seems to be widening. I mean, Beatty, what are your sort of thoughts on what's contributing to that data gap? Why is there such a gap?
Well, as I said earlier, right? So I think we've got there's a disconnect in what's required, right? So you've got the real economy that's under, especially in Europe, under some regulations to report certain things that's not coming into effect until later in the year, when then the financial services industry already has to report on exactly that information, assessing their financial instruments, and, you know, in general their investments as well, whatever they suggest to their private clients and what they invest in. So there's definitely that disconnect between data collection, reporting, the real economy, the financial services industry, and then also a disconnect between the language that is used. So, for example, should we all use XBRL for reporting, or for that language? There's a disconnect in what are the right metrics. So if we look at the EU taxonomy, that defines, it's a very rule-based regulation, defines very specific thresholds for economic activities. It's right now only focused on 2 out of 6 climate goals, so only the E out of the E, S, and the G, and it's got 500 pages. So it's, you know, it's and, you know, there's a a massive pressure to keep the stuff up to date and to set these boundaries. But it's really hard to keep track of. It's very, very complicated. So I think that's part of where our data gap is. I wanted to quickly touch on the greenwashing piece again, if you don't mind.
No, sure.
So I do think greenwashing is actually one of the, next to cyber, one of the main risks for banks at the moment, where you have, when I say greenwashing, it's accidental greenwashing, but you don't actually mean to do it wrong, but you do it wrong because you don't have the right information, and then you get in trouble. I mean, Deutsche Bank was just raided on that, exactly that account. And it again comes back, I know I sound like a broken record, but it comes back to that inability to really define impact of a financial instrument. And then you claim it's got a certain impact that it doesn't, and then you get in trouble for it, right? So I think in terms of regulatory, if we're talking about RegTech, in terms of what the regulators should be doing, I think there's three things that the regulators are responsible for to do, and that they are doing to a certain extent. Enforce the transparency, which is what we're seeing everywhere. It's everybody needs to report, is number one. Then the second two are, or the next two are a lot harder. So the first one is ensure comparability and contextualization. Right, so they basically all need to get into bed with one another and say, okay, how do we make this comparable? TCFD and the EU taxonomy, SASB and GRI. You know, we created the Value Reporting Foundation, which is not a regulatory body. I know that, but it's all the same thing: standards, frameworks, regulations. Right. In the end, it all gives us a rule as to how to publish and articulate this information. Right. And then the third one, again, coming back to the to the mindset, change the mindset, the spirit of the regulation. And I think that's where the regulators can really further this process, but they cannot do it alone. So we look to the regulators to solve everything, but they don't have all the answers. So we have to do it all together. Real economy, financial services, regulatory, and everybody, every private person as well.
Thank you very much. Thank you. Theo, what are your thoughts on the data gaps? Do you agree on the role of the regulator?
I mean, if we look at the regulation in Europe, certainly it has created a huge data demand, right? So that's in a way great news for data innovators. Not so necessarily great news for companies who are struggling and who do not have the data systems. The regulator is asking for data points that were never collected by the regulator itself before, or by companies before. The way we are trying to look at linking these environmental objectives, right? It's by, we're trying to make sure that we solve climate change without damaging biodiversity or water. And so when you're trying to put all of these together, you have usability issues, which is what also Beate was referring to, and that you can create massive confusion because you're giving this huge data dictionary and says you need to do this, and the list keeps going, the checklist keeps going, and says, by the way, if you fail one, you're out. So that's from a enforcement perspective and from a data perspective, it can become a bit of a burden. But I just want to say I think it's easy to miss the point and getting to the spirit of the regulation. I think the spirit, certainly when it comes to the EU taxonomy and also to SFDR, is to actually direct new capital flows into the real economy. And Beate had this point about real economy. And when you're understanding how that is being done by new capex, so new bond issuances, new loans that go into the system, when you're putting these financial instruments into the system, is really easy to ask of companies to say, can you please build the data systems so that when you report on this particular new loan, you have to report these criteria. I understand you haven't collected this data in the past, but if you want to get the sustainability loan, then you will have to build the data systems, measure and report. And that's easy to do. What's a really big struggle at the moment is to say, can we look at all the assets we financed historically and we might still have on our loan books or in our investment portfolios and understand how aligned are they to our EU taxonomy, for example? Well, that's really hard because, again, we haven't collected these data points, these proxies. And that's why I think there are a lot of presentations which say, oh, the alignment to the EU taxonomy in our equity portfolio is 3% or 5%. And that's what we expected in a way. I'm not surprised. What we really need to get to that sustainability goal is to really change the infrastructure. We need to invest new capex. And getting back to the data points, if you actually try to understand what are these data points that are not really greenwash free, but kind of, bypass the nonsense, capex is one of them because it's forward looking. It tells you where the company is going. And, it gives you a different picture also on what its current revenues are. So even if your revenues are fossil fuel mainly, if you show me that your capex is entirely green and you don't have new fossil fuel infrastructure, then I'm more likely to believe you as a company, for example, as an investor, that yes, you are going in the right direction. And then kind of going into the kind of thinking about, greenwashing and again, reflecting on the, even DWS. If you check the annual report of DWS, I think that something that may have triggered the whole scandal is that last year in 2021, they reported 459 billion euros in assets as being ESG integrated, and then the report this year takes a 75% haircut. That's 75% from one year to another, and now they're saying it's 115 billion that they have assets under management, where they integrate ESG criteria. And again, we're talking about an asset manager which has a long history in this industry. So, how do you take a 75% haircut in your annual report on ESG, right? I think, that there are some question marks around all of these claims. So I think we need to tone down the claims and prove it with capex.
Yeah, absolutely. And there has been. Let's talk about the sort of organisational level. There has been a real shift recently in how boards are thinking about sustainability and ESG in particular. And obviously, there's a recognition that ESG issues do have an impact on performance. There is a competitive advantage there. I mean, what do you think some of the challenges are there, particularly with larger firms?
Yeah, it's just if I jump in there, Leanne. So I think boards are dealing with and have been dealing with kind of a complex set of problems. I think like making long-term ESG decisions with short-term investment requirements are needed. It was always a big challenge, and then the lack of ESG metrics in the past for boards to benchmark against priorities is very challenging. Short-term earnings, cost ambitions are conflicting to ESG demands. Then you have competitive pressures, new markets, new technologies. But I think it is a tale of transition. Like if you look at internally and externally, it's bringing ESG up the priority list. And then EY stated in a survey that 15% of boards discussed ESG at every meeting 2 years ago, and that's up to 49% now. And then 33%, another 33% at every other meeting. I think attracting talent has become an ESG agenda. Item employees looking for companies to align with their values, retaining investors, acquiring new customers through new sustainable products. I think increased diversity at boards has led to that diversity of thought and problem solving and a move towards more ESG. I think CFOs are now incorporated ESG disclosures into their financial reporting, and that's kind of added a real new dynamic in boards. So I think there's a massive shift in understanding at boards that ESG can provide a competitive advantage. Historically, it was probably seen as maybe a cost agenda that didn't kind of land on the balance sheet. So I'd say a massive tidal wave of change at boards will be my view.
That's great. Thank you. And some great points that you've raised there. Theo, do you have anything additional to add to that?
Maybe not necessarily, but also I'm curious to also hear from Bate on the following point. So also on the data gap. So we have a lot of and we have a lot of data points that will come to the surface just because there's the nature of the competitive landscape of data providers that they will mine. They will look for these data sets, particularly when it's relevant to regulation or when it's relevant, for example, for ESG risk management, because clients ask for it. But then to Colin's point, we have a lot of data points or data points that we'd love to know. For example, I'm going to bring biodiversity again, but if we want to know how protected areas work, whether a protected area is actually protected and healthy, that usually falls into the mandate of a public body, a municipality, a government, right? And then you have companies going into this protected area. The question is, how do we get this type of data about, for example, biodiversity in a protected area so that they comply, so that asset managers and whoever invests in a particular company can comply with principal adverse impacts, which is now key under SFDR regulation. That particular data point about the health of a particular environment, which falls under the remit of a public entity, is really hard, for example, to get to the surface. It's not always necessarily easy to just use satellite imagery. You would probably need to start working with a lot of these municipalities, with a lot of these governments to actually get this data to the surface so that it's really fit for legislation. And it's quite different from, I suppose, other data sets around climate, which we can bring to the surface by the nature of the competitive business.
Absolutely. And I know that we've covered a lot of ground in our session today, and I think we're just sort of coming to the end of our discussions, but just before we sort of close out, let me just give you an opportunity to just summarize key takeaways. So just what are your sort of key points for the audience today? What are your key takeaways? Just briefly, a couple of key points.
Shall I start?
Yeah. Do you want to go ahead?
Just quickly, I've got two: one conceptual, one realistic. Conceptual, of course, gotta harp on mindset. So I think there's got to be an educational push to understand the circular economy and to understand systems. That's number one. And the number two is the more realistic one. I think there needs to be, and we had the conversation in the chat, there needs to be third-party assurance and all reporting to assess the way you get to the statement that you're making and see if that's genuine or not.
Hi, everyone. So thank you so much. Too much, and I know there's been a lot in the chat and an appetite to talk more. So certainly anyone get in touch. But thank you, Leanne, and thank you all the panelists for an amazing, engaging discussion there. Some great insights.
Yeah, thank you so much.
Thank you, everyone.
Thank you.
Thank you.
Thank you. Bye-bye.
Bye.